The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, let's check in on Bitcoin. The CoinDesk Bitcoin price XBX index is trading at $64,704. Bitcoin is down about just over 5% over the past 24 hours. And the CoinDesk Ether price ETX index is at 46.98, down 1.6%. And the new DFX CoinDesk DeFi index is down about 4.7% at 634 points. Joining us now to discuss the crypto markets is Rich Rosenblum, co-founder and president of GSR Markets. Hello there, Rich. So we are seeing a sell-off in the crypto markets. What's behind this decline?
Good morning. I'd say the past 24 hours is all about that CPI print. Crypto hadn't really been driven as much by that macro data, but I think since we've had the ETF come out, it gives a tool for macro traders, not just crypto traders, to trade intraday. And so I think we're going to see a higher correlation to macro markets. So yes, the inflation print should be good for Bitcoin, but then when other risk assets started to sell off, I think there's less money to be putting into Bitcoin, so started to follow it downwards. And traditionally, the non-farm payrolls are the most important number to follow coming out monthly. But I think given Bitcoin is more of an inflation-related asset, I think that CPI is really the number to watch when it comes to the U.S. Macro data.
And yet, Rich, we did see this sell-off overnight, U.S. time, early morning Asia time. In part, it seems to be related to what's going on in China's commercial paper and real estate debt markets. So, how much of a factor really can Federal Reserve data really be in this case? Because if it looks like inflation is the driving factor for a rally, why would commercial paper matter? Why would other things matter? Wouldn't the market just shrug it off and just say, hey, look, inflation continues to be a problem. Who cares what happens elsewhere?
It continues to be, a highly volatile and choppy market. If there's, one fund that has this thesis and they want to, take profits or add a short, that's going to mean the market can be going south and for a number of hours or days. So, it's still going to be a disconnected market where doesn't have to be a consensus view is driving it. It might just be, one or two flows. My personal view isn't that it's, such an important issue. I think that there's a confluence of other factors that are going to be driving the price over the coming month or two.
Yeah, well, we certainly... Go ahead, Lawrence.
One thing, as you were mentioning, the coming month or two, of course, it's the end of the year. Fund managers like to get their bonus, tied to their performance over the year. And they also want to have some window dressing potentially, so that coming into the new year, if the inflation story is what's going on, they want to show that they are hedged and will own Bitcoin. Do you think that they will take profits before year end, or will that narrative that they need to have this window dressing? Do you think that will be the argument that will succeed, and you'll see fund managers hold on to Bitcoin into the coming year rather than sell it before year's end?
We think we're going to close the year at an all-time high. I think there's going to be modest gains from here to there, another $10,000, so somewhere in the 70s. I think there's many other factors besides what the funds are doing. And I think this last month was less about macro, less about the inflation. I think it more has to do with bringing in this ETF that lets a whole new set of users buy. And also it's the token market. I think that used to be that you'd have investors come in and buy Bitcoin, then the insiders would take profits on Bitcoin and they'd buy tokens. Now I think it's, you don't hear anyone mentioning the word maximalist. It's almost never mentioned. It's a multi-chain world that we're moving towards. And I think that there's been so much progress in the token market and so much upside, starting to see the reverse, that people are taking profits on their tokens, rolling it into Bitcoin, because Bitcoin has been de-risked. It's not a stable coin, but I think rarely do I hear anyone thinking it could go below 50,000 ever again. I think that there's a lot of people thinking that it's going to be a stable route upwards. So if you've made a good amount of gains in other aspects of crypto, you might instead of roll back into stablecoin or cash, leave your money in Bitcoin. So I think that this past month, you've seen a lot of air go into Bitcoin, because of the extreme strength that's been into tokens.
Right. And just, commenting on your investment thesis on inflation, we did indeed see all-time highs, Bitcoin reaching just under $69,000 after that CPI report that came out that showed, 6.2% inflation in October. But now we're seeing a pullback. So my sense is that you believe that this is just temporary, short-lived. And if so, where do you see Bitcoin at the end of the year? And also, if it's a more stable, de-risked asset, if you will, what opportunities are you seizing aside from Bitcoin?
So I think we're going to be in more of a 65, 80 type range between now and the end of the year. Another reason for the pullback, I think, has been the story around Tesla. There's not that many reasons why those two should trade tightly, but they're both part of the quote unquote millennial basket. So when one falls, the other might fall due to that historical correlation. In terms of other plays, the moves have happened already, but I think you're going to continue to see money flowing into Solana, Luna, Avalanche, Algorand. I think that people have realized that we need more smart contract networks. There's different use cases for each of these layer ones, and I think we're going to see more follow through as ecosystems build. People realize there's high quality communities with a lot of adoption.